Hey YouTube, what's going on? Chris here. I want to bring you all an update on an interesting article I came across this morning. And what it says here is rising institutional investment setting pace for future crypto growth. And I thought this was important because basically what this is going to go into is all the different market cycles that Bitcoin and these cryptos have experienced. And what you have to remember, guys, is each cycle there's going to be a different component that makes it work. And I truly believe that this time the bull run is going to be from these institutional investors. Like last time, it was retail speculation that was driving the big blow off top that we ended up having in 2017. And with institutional money coming into this space, guys, I truly, fully believe that we'll be over $1 trillion at some point soon here. And, it may take another 6 months or whatnot till we get there, another year, but $1 trillion is definitely around the corner. You think about just even the gold market alone is over $7 trillion. And you think about all the money that is out there in the world. And we have to remember that this is a global space. So that allows so much more money to be able to come into it and funneled in from all different areas around the country. So wanted to dig into this a little bit here. Not going to read too much, but there are some key points I wanted to touch on here, guys. If you like these videos in terms of bringing you articles, different things like that, some of the fundamental news, let me know down low. Like, subscribe, hit that notification bell, and we'll dig into this. So this is on CoinDesk here, guys. It says rising institutional investment setting pace for future crypto growth. And this is by Sebastian Sinclair. And he goes on to say, financial institutions have begun to enter crypto with a quickening pace, setting the tone for the remainder of the 2019-2020. What makes these years different from ones prior is the speed of professionalism taking place in the market. According to our sources, Oliver von Landsberg, a financial services group with digital assets speculatism, drew comparisons on the various bull runs experienced over Bitcoin's life cycle, with the exception given to this year's fundamental growth. Now listen to this, is very interesting. Because remember, we had the big blow off top in 2013, then we had 17, and that's just how these things keep repeating themselves. The market cycles, guys, they're cyclical. The 2013 bubble was driven by technocrats and dark web trawlers, and the 2017 rally was led by the whims of speculative retail traders. 2019's growth belongs to financial institutions who are diversifying stale portfolios and finally have the professional machinery to do so. So being able to keep your coins safe, guys, on hardware wallets, different things like that, or having a good site like a Coinbase Pro that's basically backed by insurance, that's the thing big money needs, because they can't have millions of dollars getting stolen by hackers. What they need is a secure place to be able to invest lots of money, and now we're starting to see that. And it goes on to say, last month in the UK alone, 9 financial institutions for banking and over-the-counter OTC trading were brought into the fold by BCB that raised the count to 32, most of whom came on board this year. And then it goes on to say this is a fundamental shift in client profile compared to last year, which was dominated by crypto projects looking for liquidity. And then take a look at this, guys, this chart that he had up here. And there it goes on to talk a little more there. You can read yourself. But take a look right here, month-to-month market capitalization. And you can see how this volume's coming back in. You can see we had a bullish engulfing candle right here. Old resistance becoming new support. And now we're making a nice little move out of there. And basically, guys, what you have to realize is as institutional money comes in, these prices, because they're deflationary currencies, many of them, with a set amount supply, when big money, institutional money gets injected into them, they can run very hard, very fast. And that's what we're looking for, is that institutional money to where we can actually have a nice steady uptrend with higher highs and higher lows. And we don't just get these blow off tops where, the retail investors are throwing money and then they rip it right back out when they see us basically go parabolic and go straight up. So, these are the things that we want. We want a long sustaining bull market for cryptocurrency. We don't want just another blow off top. But with institutional money coming in and they're trying to accumulate as much as they can now, they're going to be holding it for longer, which would allow us to be able to set these nice higher highs and higher lows. And when you're standing on the sideline and you want to get in and you're seeing an uptrend, you're waiting for that dip, and that's when you want to be able to jump in there. And that's what a lot of institutional investors are looking at right now. Then it goes on to say here, guys, Basically, a resurgence began on February 1st of this year when the total value closed above 130 billion for the first time in over 2 months, marking a strong shift in sentiment and trend with a hint of institutional interest. By then, the upward trajectory has been checked by steady increases in growing bullish volume seen by the large bars on the monthly chart backing the trend. Remember, whenever the trend's going up, you want increased volume with that. That's the most important thing. You don't want the price to be rising on low volume. Then it says, now above 300 billion, growth seems very plausible given crypto's recent bullish fundamentals. However, that will also depend largely on how the industry navigates the upcoming regulatory framework. And guys, what you have to remember with this, we're going to have all different types of rules and regulations, everything coming in. So there's all different things that can really affect the market that we want to pay attention to. And that's why fundamental news and staying up to date on this stuff is so very important as well. But, you know, guys, we're in early. Institutional investors are just now looking at this. The last cycle was the retail investors. And also think about it, you know, all the people who sold out, say they were holding, they bought at $15,000 and it went down to $5,000. They were scared, they sold out. Now they're seeing Bitcoin rise again. The FOMO, when this institutional money really starts pushing prices up, is really going to make people crazy, and that's going to make them jump back in, and we really could see some strong moves. So just be prepared, be ready, have the coins that you want to have ready on hand, accumulate what you need to accumulate, because at some point, guys, that rocket ship's going to be coming. So just wanted to bring this to you. Hope you all are having a wonderful day. Like, subscribe, hit that notification bell if you like these. And I do believe some institutional money's coming in, guys. So let's just be patient, be calm. We need to know how to trade so we can take profits when they're staring us in the face. Take care, my friends.